questions will be at the end of the webinar this afternoon. And if you have a question throughout the course of the webinar, feel free to enter that into the chat section on the GoToMeeting pane and address that to the presenter, and then I will address those at the end of the call. Okay, and to get started, there we go. All right, to begin with, some Affordable Care Act definitions and the tasks that we're going to be going over today are all available via web help. And the web help is available two ways. The first way is by going to webhelp.mpay.com or by clicking on Help, the help link in the upper right-hand corner of Payentry. And then when the web help box pops up, you'll select the Affordable Care Act section, and there's a list of definitions of terms that we'll be going over today, as well as all of the steps that we'll be covering. Now, the first thing you will need to determine is if your company is subject to the Affordable Care Act. The Affordable Care Act is required for any employer defined as an applicable large employer. Applicable large employers, or ALEs, are employers that have at least 50 full-time and full-time equivalent employees. Full-time equivalent is a number determined by dividing the total hours worked in a month for each non-full-time employee and divide that number by 120. Non-full-time employees can be part-time, variable hour, or seasonal. For example, if you have two part-time employees, both of those employees work an average of 15 hours per week, they would equal one full-time equivalent, so equal to one full-time employee. So now you need to determine if you are an applicable large employer. To do this, you will use the total full-time employees plus the full-time equivalent employee count for the previous calendar year. If you have an average of 50 or more, you are considered an applicable large employer. For 2015, employers may use any consecutive 6-month period from 2014 in determining if they are an applicable large employer. All of the applicable large employers are required to report to the IRS starting at the end of 2015. For 2015, applicable large employers with 100 or more full-time and full-time equivalent employees will be subject to play or pay. Play or pay means offering eligible full-time employees affordable health insurance, meaning the play portion, or paying a penalty, which is referred to as pay. If you choose to play, you must offer health insurance to at least 70% of full-time employees. Also for 2015, if you choose to pay, you are exempt from the penalty for the first 80 full-time employees. Applicable large employers that have between 50 and 99 full-time and full-time equivalent employees must file at year-end and claim transitional relief. In 2016, all applicable large employers, so all companies with 50 or more full-time and full-time equivalent employees, are subject to the play or pay. For 2016, they must offer affordable health insurance to at least 95% of their full-time employees or face a penalty. If you choose to pay to face the penalty in 2016, you are exempt from penalty for the first 30 full-time employees. The first step in determining your ALE status is to classify your employees. Now, 1099 independent contractors are not counted as employees. You'll also exclude volunteers, religious workers, and students that are on work study. You'll need to determine full-time employees or employees that work at least 30 hours on average per week or 130 hours per month. And you'll also need to identify your part-time employees or employees that work less than that, work less than 30 hours on average per week. Now, seasonal employees are employees that work full-time hours on 120 or fewer days in a calendar year. Seasonal employees are not included when determining your ALE status. To accomplish these goals, there are some tools in Payentry that will help identify and group your employees. The first tool that has been added is the Employee ACA Bulk Update. This allows you to update the status, if known, on employees. The second tool is the Employee ACA Status Audit, which allows you to review the employee's current ACA status and compare it to their average hours. Then you can update their status if it is currently set up incorrectly. So now I'm going to go into the Payentry system, and we're going to take a look at both of these tools. So we'll go ahead and log in here. Okay, and both of these tools are under the Company Setup heading from the main menu. So we're going to access the Company Setup. Now, depending on your current role and your current access rights in Payentry, you may not see the Company Setup option. So if that is the case, please contact your CSR, and they can adjust your credentials so that that is available to you. So we're going to go into the Company Setup. And then the first one we're going to take a look at is the Employee ACA Bulk Status Update. And now, again, the Bulk Status Update is for identifying and kind of grouping your employees. This is usually only done once at the beginning of your ACA tracking, but you will update and kind of group the employees into groups, either full-time, part-time, and then we can work our way into the audit. So to begin with, we're going to set an effective date, and this is the date that the employee status will be set as either full-time or part-time. Now, this is a demo client. We really haven't ran a lot of payroll on it, so I'm going to set this way back to 2012 so that we can get some wages out there and actually see these reports in working. So I'm going to go ahead and set the effective date as of 1/1/2012. If you're running this today and updating your employees for 2015, you may select 1/1/2015 as the effective date, and then begin your tracking from 2015, from January 2015 on. If you want to set it back for 2014, you can do that as well, so that you can run through the 2014 numbers and determine if you're an applicable large employer for 2015 purposes. Now, the ACA status, because it's not currently set for any of my employees, I'm going to leave that on all. And then we can filter out our employees. So we have a couple of filter options here. And so if I hit this drop down, if it stays, there it goes. The first one is auto pay. Many of you might have salaried employees that are set up as auto pay. So you could filter this to an auto pay salary, and we would just see our salaried employees. So then we could set their Affordable Care Act status. There's also an employee status. This is going to be terminated, active, leave of absence, that sort of thing. So if you want to, adjust active or terminated. Employment type, if you're using an employment type, these are our default, but your options in the second drop-down may vary depending on your setup. But we have full-time, part-time under the employee type. So if you've been using the employment type field in Payentry to divide out your employees now, you can grab those, just your full-time employees or just your part-time employees to set their status. And the last one here is the department. And I'm going to use for this demo client the department status. Now I have the employees in the demo client here split up into two separate departments. We have our office and then the rest of the payroll. Now, the office employees I know are all full-time employees. They're all salaried. So down under ACA status, I'm going to set them at full-time. Because they're all salaried, I'm going to say they are not variable hour. And then I know that these are also not salary. These are my, not seasonal. These are my salaried employees. And then you do have the ability to drive this down a little bit further with the employee status with those same kind of fields on a second filter. But for the purposes of the webinar today, I'm going to leave that as just non-terminated. So these are all of my active employees that are in that Department 200 office. So I'm going to go ahead and flip them to full-time, not variable hour, and not seasonal, and I'm going to save those changes. So that update has completed. And I'm going to go back into my bulk update here, and I'm going to do the same thing now with that same start date. And now I could pick my full-time, and I can, I've got, so we're going to leave that at all for right now. We're going to go ahead and filter the other department level. And we want just the remainder of payroll. And so these are going to be all of my variable hour employees. Now, if you know, based on going through your company, that some of these are already full-time, you can set them at full-time. If you are incorrect, when we go into the status audit, it will advise to make those changes. So right now, I believe these are all hourly employees. They're all variable hours. So I'm going to set them all right now at part-time. And I'm going to say variable hour, yes. And seasonal, again, I'm going to set to no. So we'll go ahead and save those changes and update the remainder of our employees here. Okay, and I just realized I think I forgot to check the boxes here for the first level, so I'm going to go back and just make sure here. And their ACA status, of course, is not set because I didn't check the boxes. Ensure that you check the little boxes next to the employee's name when you're setting their status. So going back to my office department here real quick, we're going to set those to full-time, variable hour is no, and seasonal is no, and save those changes. See, now we can see that 4 records have been updated. So now if we flip that ACA status to full-time, we'll see only our full-time. If we flip it to part-time and include everybody there, we'll see everybody that's in that Department 100 payroll. Now, the last step after we've kind of gone through and organized the employees into an ACA status, and again, if at this point we are just with the part-time employees, we're estimating that they're part-time. I know that they're variable hour employees, but I'm going to be able to tell if they're part-time or full-time in the next step. But at this point, we need to make sure that all of the employees do have an ACA status so that they show up when we run our audit. So to do that, I'm going to flip those kind of back to their standard non-filtered status, back to all and auto pay all. So now I'm seeing everybody. So we can scroll down here and just make sure that everybody has an ACA status. And again, if you're not sure, you can enter in an ACA status, and we will drill down in the next under the status audit and verify that we have put them in correctly. So now that everybody in the company here has got an Affordable Care Act status, a variable hour status, and whether or not they're seasonal, now we are done with the bulk update. So we're going to go and flip over to our Affordable Care Act status audit. And this is where we're going to be able to tell, based on the employee's hours, what their status should actually be. Now, to begin with, we divide the employees up into 2 groups, and this is why they will need a variable hour status. They'll either be variable hour or non-variable hour. And then we have 2 different options for the average hours. You can measure them based on 30 average hours per week or 130 hours per month. Both were the suggestions from the IRS, so there's it's entirely up to you which option you would like to choose there. Now, the effective date on this is going to be the date of change. And so I'm going to go ahead and set this as of January 1st, 2013, because I'm using the measurement period of 2012. So if I were measuring 2014 and looking at the January through December 31st, the calendar year of 2014, I would set this effective date as 1/1/2015. And if you're looking at a look back from October of 2013 through October of 2014, for that 12-month period as your look back, you could set this as of November 1st, 2014. So this is going to be when the changes that we make in this report, when they become effective. So my measurement period, I'm going to set as 1/1/2012 through 12/31/2012. And so I'm looking at that as my look back 12 months. Now the hiring date range, I can limit the new hires that show up, but I'm going to leave that to include everyone. Now under the ACA earnings code group, I'm going to select the code group ACA service hours. And we'll talk about service hours here in just a second and kind of go through that definition. Now, as you're going through this process under your status audit, if you don't see that ACA code group, please contact your CSR here at Benepay either through email or with a phone call. And they've been instructed as to what needs to be included in those service hours. And so they can set that code group up for you. Unfortunately, it currently isn't a process that can be done through the Payentry software. Now, the filters, again, are very similar. I'm going to leave those right now, and I'm just going to display the non-variable hour employees. And so these are the non-variable hour full-time employees. Now, if I click on the little calculate button down here at the bottom, I know just based on the fact that we just looked at these employees in the bulk status update that these are my salaried employees. So they're not going to show, well, they did have hours in 2012 apparently, but your salaried employees would normally not show in average hours. So the projected ACA status, if there were no hours, apparently we did log some hours back in 2012 for these employees. However, if there were no hours, you would have to leave that as your full time. So the other group of employees we're going to look at is our variable hour employees, and we're going to run through those same dates. So I'm going to go ahead and set this as of 1/1/2013, and my look back of 1/1/2012 through 12/31/2012. And again, make sure that code group is set up as ACA. And then I'm going to calculate on my hourly employees. Now, with my hourly employees, I set all of these at part-time. So this is their current ACA status. So just to kind of run through the fields here, we've got the employee ID and their name, the ACA status that we updated as of the bulk status update, the start date of that ACA status as well as the end date. If you see this 12/31/2100, that is kind of forever, so they have been set up as part-time indefinitely. Now, this employee, Brian Smith, averaged 15.65 hours during my look-back period of January through December of 2012. So that would put him with 15.65 hours below that 30 key mark there at part-time. And so the system is suggesting that he be part-time, and now I can update that with the new Affordable Care Act status. So if any of these employees average more than 30 employees, even though I set them as or more than 30 hours, even though I set them as part-time in the bulk status update. When we run through the audit, it's going to suggest that we move them to full-time, and then I do have the ability to switch them over to full-time and then save those changes. Now, it will update that then as of our effective date. Now, you may notice some of the employees are listed in yellow, and unfortunately, with our demo client, because this is mostly used for training, we don't run regular payroll, and there may be some gaps in their pay. If the employee shows up as yellow, if you click on the audit results, it shows that there was a break in service detected for this employee between the pay period ending September 8th and the next pay period beginning on November 4th. So there was a period of time here that we did not conduct trainings, or that in the trainings we did not actually run the payroll, where this employee was not paid. So breaks in service, this is where you'll kind of have to determine whether that employee is currently, part-time or full-time, is averaging the hours across the entire measurement period. So you may have to kind of dive into that employee's pay history and determine where their status should fall. Now, if I see that Brian Smith here, for most of the year, from January 1st, my start date, through September 8th, he had, pretty straightforward service, but there was a break due to a leave of absence, something like that. I could change these dates, run them from January 1st through September 8th, and determine, what his average hours were for that period of time, and then update his status as appropriate. Now, the status update is the tool that you will use continuously. So at the end of each look-back period, if you're using a 6-month look-back period, you'll want to run this at least every 6 months at the end of that look-back period and determine the status of your employees, and then update them as appropriate. If you're using a 12-month, again, you'd want to run this every 12 months after that last payroll has ran for your look-back period, and update the employees again as appropriate. Those are our 2 tools that have been added there. I'm going to jump back to the presentation here. And we'll go on to the next slide. Now that our employees have been categorized appropriately, we can run the large employer estimate report. To run the report, hours must be recorded in the system for part-time and variable hour employees. And we just verified via the audit tool that hours were in there for all of those employees. The hours need to include all of the service hours. Now, we talked about service hours a minute ago, but to define that, service hours include regular, overtime, FMLA, jury duty, PTO, on-call, vacation, holiday, etc. Basically, any hours that the employee would normally work based on their schedule if they were available. So, if the employee is off on military leave, if they're off on PTO, if they're taking vacation, all of those hours should be included in those service hours. Even though they're not working, based on the FMLA, based on the Affordable Care Act information, those hours should be counted towards whether or not an employee is considered full-time. Now, not included in the service hours would be if you calculate your bonuses with hours. So if you give somebody a bonus for 20 hours of their hourly rate, but it's truly a bonus, it's not being paid for hours worked, that would not be included. Tips are not included. Mileage rates, so if you're paying an employee 140 miles, those should not count. Those 140 miles should not count towards their full-time, and those types of things are not included in the service hours. Now, the report is called the Large Employer Estimate Report, and the report's an estimate because the IRS requires that each employer count the employee's hours by calendar month. And the way that our system is set up, you're entering in bulk number of hours each pay period. And some pay periods, depending on your frequency, may cross month lines. And so the data is not in the system to divide out appropriately based on the calendar month. And because of that, this is an estimate as to whether or not you're a large employer. Now, to run the large employer estimate report, it is a report in Payentry. And so if we go back to our Payentry here, and we go into our reports, it has been added right here, the ACA large employer estimate. And so to run this report, we're going to ignore the date range at the top. The date range is actually entered on this report down in the options. So you don't have to set up your look-back period in the override dates. You can leave it on the most recent pay period. Your look-back will be entered down here. Again, we're going to ignore the sorting. We're going to leave that on detail so that we see each individual month. Now, if you are part of a parent-child company relationship, you can run this report from the child company and then include the parent company's ID number, and then the report will actually include both companies in its calculation. Now, the next thing we're going to enter is our code group. So again, we're going to enter in that ACA. Now, this is a type field and not a drop-down box. So be sure whatever code group you're using, that if you're using that ACA code group, you enter it in exactly as it shows on the when you were running your audit, that it shows as ACA there. Next, we enter in the report year, so the year we are reporting on. And so on this slide, we just put in 2014, but if I were actually running it for the audit that I just did, I would be running it for year 2012. And then we're going to enter in our look-back period. Now, the look-back period that I ran on the demo client a minute ago was calendar year, so we're running it January through December. And so this is where your look-back period dates will be entered. Then we can check to include seasonal if we'd like to include the seasonal employees, and we can run the report. Now, on the next slide here, I do have a sample of that report output. And what the report is showing us is the individual calendar months that we have in our look-back period. Now we have our number of full-time employees, and now this was ran, and I apologize, I put this presentation together before, obviously, doing the bulk update that we just did. So at that time, there were 0 full-time employees identified. However, the number of full-time employees per month will be listed in the appropriate fields here. Then the number of employees that were identified as part-time in the next field, our total part-time hours, and then our full-time equivalency of those part-time employees. Now, the next field over is going to be your total full-time employees plus your full-time equivalency to give you kind of total full-time employees for the company, including the full-time equivalent of the part-time. The next field will show any employees identified as seasonal. Again, those are employees that work full-time, 120 or fewer days in a calendar year. Then we have kind of that same number, your full-time equivalents, less the seasonal. So if there were seasonal employees, minus the seasonal, and whether or not the seasonal applies as pushing you into a large employer. Now, down at the bottom of the report, it shows, first of all, so we're looking at our total full-time and full-time equivalents, less seasonal. This company only averaged 5. So based on this, the Affordable Care Act defines large employer as over 50 or more. full-time employees and full-time equivalents. So per this data for 2012, we are not a large employer. The company may not be an applicable large employer, and clearly is not as we're averaging 5 there. Now, additional reports. After you determine that you are a large employer, you have to make the decision whether or not you want to play or pay. And if you decide you want to play and offer health insurance to your full-time employees, the CSRs can produce a report that will include all of the full-time employees which need to be offered the health insurance. And the fields needed to run those reports currently are only in our desktop version of our software, which is why the CSRs would need to run this report for you. However, the fields are in development to be added to Payentry so that you can run that report yourself at any time and identify which employees are listed as full-time. Now, the maintenance, after you've gone through this process, we've identified whether or not our employees are full-time, part-time. We ran through the bulk status update. Then we verified that with the audit. And we've ran the report to determine whether or not we're an applicable large employer. Then on an ongoing basis for maintenance, you'll need to run the employee ACA status audit at the end of each look-back period, and then update that employee status, each employee's status, if it has changed. Also, when you're entering a new employee into the system, they should be assigned an ACA status with their projected schedule hours. I have on the screen here the new employee wizard that you may be familiar with in Payentry, and the ACA status has been there for a while. So when you're entering a new employee, based on their projected schedule, you would select whether they're full-time or part-time. Now, at the end of your look-back period, you will verify that with the ACA status audit and verify that they fell in line with either full-time or part-time and update at that point as appropriate. Now, the last consideration for your ACA compliance is whether or not the employee premium for health insurance that you offer is considered affordable to the employees. Now, there are multiple calculations that can be used to determine affordability. However, the IRS has instituted a safe harbor process to simplify determining if your premiums are affordable. This only applies to employees who are not eligible for federal programs such as Medicare or Medicaid. And the reason for this is employees who can receive Medicare or Medicaid are not eligible for a subsidy on healthcare.gov or the state marketplace. They would be redirected then to Medicare or Medicaid. For the safe harbor calculation, only your lowest cost plan of employee-only coverage that provides minimum essential value must meet the affordability test. So we're not looking at our family plan. We're just looking at employee-only coverage and the lowest cost plan. Now, to calculate based on the safe harbor process, you'll first need to determine the full-time employee with the lowest hourly wage. If you need assistance with that, you can contact your CSR, and they can walk you through determining which employee is has the lowest wage. We can do that with a report writer very simply and get that information over to you. Then we need to determine if the premium for the employee-only coverage is at or below 9.5% of their full-time wages. So I've included an example here. So we've identified Dan as our lowest paid full-time employee. And we have Dan's hourly rate set at $8.50 per hour. So we would take his $8.50 per hour, multiply that times 130 hours to get a full-time rate. Now, Dan might not work, an average of 130 hours per month, but we're getting his full-time rate for the month. So 130 hours was defined by the IRS as full-time, and that comes to $1,105 per month. That is his monthly wage for full-time hours. Now we take that $1,105 per month and we multiply that by 9.5%, and we get a premium of $104.98. And so that means that the cost of monthly premiums needs to be at or below $104.98 for the employee-only coverage. Now, if our premium is above that, then that premium would not be considered affordable for Dan. Now, the reason we take the lowest paid full-time employee is if your premium meets the affordability test for the lowest paid employee, then it obviously meets that same test for every employee that is paid more than that. So this is kind of the safe harbor method of determining whether or not your plan is affordable for the employees. All right, and that concludes the Affordable Care Act webinar. And if you'll bear with me for just a second, I'm going to check in here to see if we have any questions. We do not have any questions right now in the chat field. So I'm going to go ahead and unmute the phones if anybody has any questions. Now is your time to ask them, and we'll try to answer them to the best of our abilities.
The red button here. If you have coverage, the only time you pay attention to do it on the.
I'm sorry, Mr. Clutch, if you have coverage. Okay, I'm sorry, that feedback.